Hey Bowtie Nation, Joseph Hogue here. Thank you for joining us for another Monday market update, 9 a.m. Eastern, every Monday morning. Get you ready for the week. Stocks to watch, economic news to highlight. Huge topic this week. I will admit I have not been a fan of Robinhood, the stock, ever since its IPO at $35. It's now down to $9. I have an account on the site, but have not bought the stock. What I will give this platform credit for is for changing the game of investing. It pioneered that no-fee investing, basically forcing the entire industry to go to no-fee investing. It's helped bring millions of investors onto the platform and onto investing, and now it's doing it again. Robinhood just announced that it would start offering 24-hour, 5-day-a-week investing. This will be a revolutionary change in investing, but not without risks, and some of them that could cost you a lot of money. So I want to detail those, show you how to use this. Stick around after that though, and we'll do our stocks to watch this week, as well as the sectors and some of the strategies I'm following. Before that, if you're one of the last people not using Robinhood to invest, click on the link I'll leave in the description below. You're going to get a free share of stock just for signing up. Like I said, I'm not a big fan of Robinhood the stock, but this is a great app to invest. Use fractional share investing, which means you can buy any stock you want, no matter what the price. You just put in how much you want to invest, and you can get a share of Google. You should get a share of Microsoft that is now over $300 with just $5, $10, whatever you want to invest. Plus, you get that free stock between $5 to $200. Even better though, once you sign up, you're going to get your own link that you can share. Get more free stocks when other people use your link. You can scroll through here. As you see, I've gotten 76 free shares just by sharing my link. You see some of these Microsoft, a share of Microsoft for $137. Scroll up here, I've gotten 5 shares of Plug, ticker PLUG, and it didn't seem like much at just $4 a share back in 2019, but that stock ran to $60 each, 5 times $60, just for sharing that link out and getting those free stocks. So don't wait on this. You want to be ready for when that 24-hour stock investing gets started here in June. So click on the link below, get your free stock, and get set up now. I want to get started on that 24-hour investing though, because this is going to be a huge opportunity, but also some very big risks. Robinhood announced in a blog post last week that it would start offering this 24-hour trading in select stocks and ETFs 5 days a week. Now, normal stock market trading, if you know, is between 9:30 a.m. to 4 p.m. Eastern. That is when the major markets, the exchanges, are open, with extended hours as early as 4 a.m. to that 9:30, and then after 4 p.m. to 8 p.m., kind of extended hour trading. It's available on a lot of platforms, but there are very few options for those night owls out there and that overnight period from 8 p.m. until 4 a.m. the next morning. But starting this week, and again, rolling out to all users on Robinhood in June, Robinhood's going to allow that overnight trading. That's between that close of market at 4 p.m. all the way through 9:30 a.m. the next day in 43 stocks and ETFs, including Apple, Amazon, Tesla, and some popular exchange traded funds. Now, essentially, you're going to be able to buy and sell these stocks at any time between 8 p.m. Eastern Sunday night all the way through 8 p.m. Friday. Robinhood hasn't fully rolled this out yet, but does offer a screenshot here and a step-by-step for how this is going to work. I'm going to walk you through that. The stocks available for 24-hour trading are going to show you a special icon on those on the app and it's going to create a special list with all 43 stocks and ETFs available there. Now, as mentioned, it's already said that Apple, Tesla, and Amazon will be available. I'm guessing it's also going to be at least most of those most popular 20 stocks on the list, like Disney, AMC, and Ford. You can go to Robinhood. They have a top 100 list. I bet it's probably a lot of the most popular stocks in there that they're going to be able to make available for that 24-hour trading. Now, for the ETF list, I would also assume that it's going to be those most liquid ETFs, like the SPY, the Spider S&P 500 ETF. It's a trust that tracks, that holds all 500 companies in the S&P 500, or maybe the Invesco QQQ trust, that triple Q, which holds the NASDAQ 100 stocks. Basically, for these stocks, Robinhood just needs to know that there are going to be enough investors interested in that 24-hour trading, that overnight session, that there's going to be in liquidity of these. There's going to be enough buyers and sellers that they're going to be able to bring those together, narrow those bid-ask spreads, one of the major risks we're going to be talking about, and really create a market opportunity for a lot of investors in these. That's why I think they're going to go with these most popular stocks, the ones that already have tens of millions of shares traded in that normal trading session during the day, the ETFs that are some of the largest ETFs on the market, and there's lots of liquidity in those. So first, you want to look through that list of 43 stocks and ETFs available for this new 24-hour investing on Robinhood. Robinhood. Eventually, they're going to expand it to more stocks. Right now, just available in those 43 stocks. Once you know the stock you want, you're going to set a limit order price. Now, this is different from market orders that a lot of you are familiar with, where you just set in how many shares you want. It executes immediately at the best price in the market. This limit order price, this is going to be where you set a max price that you're willing to pay for the shares, or a minimum price that you're willing to sell your shares for. I'm going to get into why that's so important and how to do it next. Next, you're going to set when you want that order to execute, the trading hours and time in force, whether it's just for 24 hours or good till close. You're going to tell the platform when you want that to execute, or when you want that to cancel out. Finally here, you're going to select how many shares you want. So for most orders here, you're just going to divide how much you want to invest. So you have $5,000 to invest. You want to invest $5,000 into shares of Apple. You're going to divide that $5,000 divided by that limit price that you set. So how much you're going to pay per share. And that's the number of shares you're going to set to trade. So it looks like it's going to be a very easy process. Could open up a lot of opportunities for investors. First, investors are just going to be able to trade on their time, not just when the market is open. I do the investing in our family, but if my wife wanted to invest, she's a night shift nurse, so she would have to stay up during market hours to do that, when she's usually sleeping, getting ready for her shift. Now she could do that investing while I'm snoozing away at night. For all investors, though, it just gives you the opportunity to trade stocks on breaking news outside those market hours. It's going to add a whole new side to investing. I'm excited to see how that rolls out. Very important, though, and I hope you're still with me with this, because I want to reveal 4 risks or points that you need to know that could cost you a lot of money if you jump into this before you're ready. This 24-hour investing could look a lot like futures trading for commodities, which already has that overnight session. Now, I've been trading futures in energy, metals, currencies off and on since 2010, and it's not all rainbows and unicorns. In fact, that 24-hour trading on breaking news became a rude awakening for me back in 2012. I had sold short gasoline futures, the RBOB contract there on the CME, which means I thought gas prices were going to fall. Gasoline had jumped recently, and demand was kind of weakening. Prices would have fallen except for one event. So I wake up at 6 a.m. to go to work and then hear that a refiner in Canada had exploded, causing fears of that short-term gas shortage, and the price just spiked. I was down $18,000 and facing a margin call on my account all overnight session. So it's these kinds of unknowable events as well as other risks that can make overnight investing extremely stressful and volatile. So I want to point out 4 things that you need to know before getting started. First is going to be more volatility. Okay, how much stock prices bounce up and down is higher after market hours and is going to be super high in this overnight session. Again, there just aren't going to be as many investors trading, so the difference between how much someone is willing to pay for a share of stock and someone is willing to buy it for is going to be much bigger, that spread. Okay, that's also going to mean any news that could send these stocks skyward or plunging lower on just those knee-jerk reactions. So as with daytime investing, it's best, even when that breaking news comes out, just step back, think about it before you jump into or out of a stock, because that volatility is going to whipsaw stocks back and forth. Now, second here, related to that, these bid-ask spreads are going to be very wide, even for these popular stocks. Remember, that bid is the price someone is willing to pay for the shares, and the ask is the price at which someone is willing to sell their shares right now. The difference here is usually less than a penny during these market hours, but could be much larger overnight, just because you don't have quite as many investors coming together on each side of the buy or sell. So if you placed a market order to buy, which executes the order immediately at whatever that asking price is, you could be out a few cents per share on this. Now, Robinhood is restricting overnight traders to only limit orders for now. That's where you put in that specific price that you're willing to buy or sell the stock for. So it's going to kind of shorten your window for bidding that bid and ask spread. Now, my suggestion here is if that bid ask spread is more than a few cents or more, put in your limit order for somewhere in the middle or just above that bid price so you get a better deal on these shares. Another big risk here is that these overnight stocks could be prone to fake news and just market manipulation. Okay, this is not usually a problem with these mega cap stocks like Apple that has 60 million shares traded on a daily basis, has millions of investors following that stock, analyzing the news. But when you thin out that liquidity, when you take it down to maybe just a few thousand people watching those shares, watching the news that's come out, you could see efforts by a lot of traders trying to push the stock higher or lower, trying to whipsaw that stock so they make a buck on those spreads. Now, I'm guessing social platforms like Reddit, Wall Street Bets are going to blow up with pump and dump schemes, fake news, anything they can do in the overnight session to push shares up higher or bring them down, or to squeeze them, short them out lower, so somebody who's on the other side of that can make a quick profit, trying to push these stocks higher in the overnight session. Now, again, just one more reason that when you see these stocks jump during that 8 p.m. to 4 a.m. session, you need to step back, think about it before you make a decision. A fourth point here, if you are going to start investing in this overnight session, it will pay to know at least the basics of technical analysis. Most of us here on the channel, we follow kind of a fundamental analysis approach where we look at the valuations, we look at cash flows, we look at revenue, we look at earnings. That is all fundamental financial statement type of analysis. Technical analysis now runs more on charts and patterns in the stock price to try to find those trends up or down. That is much more a factor in this very short-term or overnight investing, especially in futures. That's where you're going to use those prices and charts, trends to help you make those buy and sell decisions. The technical signals like the 50 and the 100-day moving averages, the relative strength index, the RSI there, and Bollinger Bands are very important as triggers for that short-term stock changes, and it's going to be even more important with this kind of limited liability or limited liquidity, high volatility overnight period. Now, I want to highlight some of the stocks I'm watching as well as the economic data that could guide the market this week. First up here, I'm watching Alibaba Group, ticker BABA. It's scheduled to report its earnings on Thursday with the shares down 30% from that January rebound. So it appeared that China was going to reopen its economy, was really going to get some economic growth there, shot all these Chinese stocks up. They have since come way back down to earth. That economic rebound in China has disappointed, but there are signs of growing consumer demand, especially after a very surprisingly strong earnings report from e-commerce company JD.com last week. So we're hoping that Alibaba kind of follows through, showing that strength in the economy. But besides that potential to beat its earnings expectations, Alibaba could also announce more details on its planned six-way split of the company. This is something I covered in a renewed valuation call just about a month ago. The company said that it was going to be splitting into 6 different pieces, IPO for each of those segments. The profitable logistics segment is expected to seek an IPO very soon. If you own shares of Alibaba before that, you're going to get shares of that new logistics company. That could help bring more investors into shares of Alibaba pre-split and boost that price. Walmart, ticker WMT, is also going to be reporting its earnings on Thursday, with shares doing pretty well over the last year, even as consumers reduce their spending in other categories. Now, Walmart has benefited from a greater share of its earnings from that grocery segment. It's got about 40% of its total revenue from groceries. It's a much less cyclical component versus some of their other retail items, so it's helped to bring shoppers into the store. Of course, they hope that they buy other things while they're there. I would not expect a big bump in the shares because they're already relatively pricey on a price to earnings basis, even on an earnings beat, but the report is going to be an important look into the health of the consumer and just the direction of the market here. I'll also be watching Republic First Bancorp, ticker FRBK. This stock has climbed 61% since that May 4th low of 62 cents a share, all the way back up to $1 a share as those shorts get squeezed out of it. Okay, more than 18% of these shares are shorted, which doesn't leave a whole lot of room considering 21% of the bank is held by insiders and 52% held by institutional investors. So not a whole lot of floated shares for those short sellers to borrow and sell short. I initially bought these shares as it fell when investors confused it. A lot of traders rushed in here, confused it for First Republic, FRC, when it was tanking. Okay, that bank, the FRC, eventually got taken over by the FDIC. These two banks couldn't be more different, though. Republic First Bancorp, FRBK, is a Philadelphia-based bank, very much more a community bank. I have increased my position to 30,000 shares. The stock was up 18% alone, and if this continues, I would expect a bigger squeeze of those short positions and just a faster price appreciation. We did see that just 2 of the 11 stock sectors closed higher last week, though stocks in the technology sector did come close with a loss of just 0.19%. That ended up helping to boost the NASDAQ, outperform the index there. That massive outperformance in the communication services stocks, okay, those telecom stocks, internet stocks, their social media stocks, they're in communication services up 2.4% last week, really helping to boost the market, hold the S&P 500 index to a loss of less than 0.33%. But that was really driven by an 11% boost in shares of Alphabet. Okay, ticker GOOG. The old Google here makes up 25% of that communication services sector. Okay, with the communication services sector representing 8% of the S&P 500 index, without Alphabet. So ex Alphabet, the index would have been down 1.2% for the week. So not quite as strong as we did see. And one thing I do want to point out there, looking at a price chart going back to July of oil prices. Okay, this is the crude oil futures there on the CME. You can see here in this price chart back to July, oil prices have really traded in a range up to as high as about 90, down as low as $65 per barrel of oil back there in March, but really even in a narrower range there from 70 to about $85 a barrel. Now the price of oil is back down to the lower end of this range, right around $70 a barrel. Oil stocks have sold off 9% in the last month as the price of oil comes down to the lower end of that range. Now the Biden administration reaffirmed its commitment to buying oil to refill the SPR, that Strategic Petroleum Reserve. Previously, they had come out, they were going to say that they were going to buy when the prices was within $68 to $72 a barrel. They missed that opportunity in March, received a lot of flack for missing that opportunity, not buying some of those very cheap barrels of oil and refilling the SPR. So they've since reaffirmed that commitment to start going into the market, buying those barrels off the market. Now, the SPR purchases, along with a gradually stronger demand from China, should keep oil within that range from $65 a barrel up to about $85 a barrel. I will be buying oil futures contracts and oil stocks here. If the price of oil falls below $70 or stays right around here around 70, I'll probably increase my position right around $67.50, $65 a barrel, buying more of those oil stocks that we've talked about on the channel before, and then hedging that downside risk if oil rebounds near about $75 a barrel. We've talked about this over the last few months, playing this range here. The strategy has worked very well over the last year, buying oil stocks right around this $70 a barrel oil, selling or hedging your risk when it reaches right around 85. Get your free stock worth up to $200 just for signing up with the link I'll leave in the description below. Or click on the video to the right for how much you'd have investing $100 a month in the QYLD, that income ETF, and 2 stocks I like better. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.